Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by Austral Asset Management. It's Tuesday, the 28th of February, and we have Charu Chanana, market strategist from Saxo Markets, as our guest today. Charu, good afternoon.
Good afternoon, Brian. Good to be back.
Now, absolutely great to have you on the show, Charu. Now, we're going to get your insights in a minute, but before that, let's take a look and see how regional stock markets have performed and also cryptocurrencies. Bitcoin is at 23,411. It's down 0.34%. Ethereum is at 1,625. It's down 0.62%. Looking at regional stock markets, we've got the SGX, which is up 0.53%. Bursa Malaysia bucks the trend. It's down 0.16%. Shanghai is up 0.08%. The ASX All Ordinaries is up 0.47%. The Nikkei is up 0.14%. The Hang Seng is up 0.26%. And rounding up the numbers, we've got the Kospi, which is up 0.83%. Charu, your views on how markets have performed in the first half of the day?
Well, I guess, what we saw in the overnight session in the US, Brian, was that there was some recovery in the risk sentiment after we had a big beating on Monday, primarily on the back of that PCE print on Friday, which was hotter than expected and kind of reaffirmed, higher for longer inflation and higher for longer interest rates, kind of sending some shockwaves to the markets. So that a reversal to some extent of that rhetoric did come about in the markets last night, and I think that's what is flowing down to the Asian markets as well today. Yields were a little bit off their highs as well, so that's kind of supporting more so the tech stocks, and as we can see in Asia as well, Kospi is outperforming, which is relatively more tech heavy as well.
Now, Charu, I think from your Saxo research, you tend to have the view that Europe is going to outperform other markets. Why do you hold that view?
So, Brian, yeah, I think that's a very interesting point that you brought into the discussion. I'm glad you're following Saxo's research on that. But this year, of course, was supposed to be an year where U.S. inflation kind of eases and central bank tightening pace actually, slows down. We saw that rhetoric pick up quite well in January, but of course, February has been really a mirror image. The concerns about inflation are not dying out, like we just spoke about briefly, right? So US equities continue to remain under pressure because of that. And what we've been talking to clients about is obviously diversifying your portfolios. If you are a long only, US only investor, it is important to look in other places as to where you can really get the returns. And European stocks have been outperforming since the start of this year because the macro fundamentals have really improved significantly after last year, where we were looking at a recession probably coming in Europe because of energy pressures mostly. That story has really turned around, and natural gas prices in Europe are now down 60% from the peak that we saw in December. So that's really easing the pressure on consumers. It's easing the pressure on businesses as well, and activity levels have been picking up, as we've seen from the economic data coming out of Europe being really better than expectations. Plus as well, now the China reopening story has also picked up traction faster than expected, and that benefits Europe as well, more so than it does the US, because Europe is a more prominent trade partner for China as well. So I think cyclically, it does look like European stocks can outperform US stocks this year. And even if you look at it from a structural standpoint, we've seen this massive outperformance of the growth heavy US tech stocks, particularly over the last several years since the global financial crisis, basically. We see the reversal of that trend just starting now, where the more value-oriented European indices could start to outperform in this high inflation, high interest rates era, because investments go into more productive assets, and they are mostly in Europe as compared to, like I said, the growth-heavy US indices. So there's room for some structural outperformance there as well. And from a valuation standpoint, it really makes a lot of good sense to add some European indices to your portfolios because they are still far cheaper than their US counterparts.
Now, Charu, then which sectors should we be putting our money in, given what you've just advised us in terms of diversification from a risk and geography perspective? Obviously, when we're talking about Europe, one sector has to be defense.
Yeah, absolutely. I mean, given what's going on in the geopolitics space, I think, with this 1 year anniversary of Russia's invasion of Ukraine, and now China getting involved in the picture as a mediator, but, you don't know what kind of a response that garners from the US, whether they continue to support Ukraine if China becomes the mediator or not. So geopolitical tensions remaining high. And of course, the ideal way to hedge those tensions is by adding some defense stocks in your portfolio, and European defense, certainly, like you said, because the focus in Europe, particularly on defense spending, is quite significant. So I think that will continue to help these defense stocks, outperform in the next few years. But also, I mean, if you look at German industrials, they've also been so beaten down last year, again, because of natural gas price pressures and concerns about a recession, that a turnaround there appears likely as well. The other area that we've been highlighting to our clients are the European luxury stocks as well, which is extremely interesting now because two reasons. One, China reopening, and that certainly brings a lot more demand for luxury goods as Chinese, visitors start to travel abroad, and they start to, the demand comes back really for luxury items. But secondly, also, luxury brands have this high margin business. They have pricing power. The consumers that actually buy those luxury stocks are not as much impacted by inflation as the others. So they still have that pricing power, and they can thrive better in this inflationary environment. We're also looking at outperformance in the energy and the semiconductor space, because that's where a lot of political capital is going in Europe, right? So a lot of interesting areas to look at in Europe.
Okay, so just to recap, it's defense, it's luxury goods, it's the energy sector,
Yeah, absolutely. We can add semiconductors to the list as
and
well.
semiconductors. Thank you very much, Charu. Thanks again for coming on the show. Thanks for your insights.
Pleasure speaking with you, Brian.
Now, we've been speaking to Charu Chanana, market strategist from Saxo Markets on BizTech's Asian Midday Market Watch, powered by Austral Asset Management. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.